Yeah, we are live now. It's a final topic for today, but it's one of most interesting because venture industry and how ventures hunting for games, it's really interesting for a simple user. So we are starting just from these questions. You can take 2 minutes each of you to tell us about you, your company, your venture company, and then we go into a questions how you choosing what ways you are taking for find these games. So let's start from Jake. He joined us first, so we give it the road to him.
Awesome. Thanks, everybody. So my name is Jake Seltzer. I'm the managing director of Quantix Capital. We are a licensed and regulated investment fund and payment service provider here in the UAE. We've been here for a number of years now, moved our operations from London and Kuala Lumpur. And yeah, we invest in everything from tech to renewable energy. We're a Web3 focused fund. However, we also do traditional finance as well. Really excited to be here, and thank you, Roman, for giving us the opportunity. It's always great to be able to partake in UAE-based events, something that we always continually look to do. And yeah, appreciate the platform to speak.
Perfect, thanks. We are going to Nadim. Nadim, few words about you and your company.
Yeah, first and foremost, thanks a lot for having me. So a bit about us. I'm the co-founder and COO of Welist Ventures. We are a Web3 incubator. So we advise young projects on growth and investment strategies. And essentially, we just put our focus on the founders themselves, and they come to us with a blueprint of what they want to build. And we kind of advise them on how to build them. And so we act more like a venture studio in a way where we also come in as the investment party and give them their first check, let's say, and then hold their hand to to get them where they want to go, like kind of raising a child.
Okay, yeah. I'm also building some startup in 2021. Now starts from crowdfunding, from angel investors, then we talking with VCs, and I go all this way. So now I want to better understand how from your side it looks. Yeah, so we are going to Alphaberry Capital. Welcome.
Well, hello guys, nice to meet you. Thank you for introduction. Basically, we are prop trading company, so we're trading the assets belonging to our founders. And of course, we are going to expand to the comprehensive asset management company soon here in UAE. And also we have the quite extensive experience in comprising diverse portfolios of tokens, mostly early stage projects. And well, so I have some interesting examples that we could
Could share with us, yeah?
Yeah, sure. Just to share. So I think we have a nice company here. So let's kick it off.
Oh, okay. Let's start. So I have one interesting question. What is the narratives ventures looking now in the market? Most of them, because for example, Game 5 was a real top leader narrative for 2021. For now, I think it's missed, too much missed. We have a bunch of meme coins when even DVF Labs building their meme pad platform for BSC chain, yeah, and they invested in a lot of a lot of meme coins. Please one more our speaker. Yeah, so the question is, hi Nikita, we are starting now, so you're just in time.
Excuse me, guys. Excuse me.
Okay, guys, I think it will be okay if we will give 2 minutes to Nikita to introduce himself to our attendees. maybe for somebody of you, if you don't know each other in a face. So Nikita, a few words about you and your company.
Yes, absolutely. I'm not a company actually. I'm a personal brand, but I also work with Outlier Ventures for a year and a half, I think, already as a mentor in their acceleration programs. So what can I tell about myself is that I'm a guy that actually is connecting companies to companies to each other. I work with VCs. We share deal flow with them. I'm an angel investor myself, so I also invest in these startups. And I work with like dozens or hundreds of different projects already for 3.5 years. And yeah, I think that's a little bit about myself. So I work with VCs, we invest together, and I advise projects.
Okay, it's also one of the way, and I think you make a much bigger work because you are the first step to connect another venture capital. Yeah, so you're providing much more big deal flows. Yeah, than others ventures have some criteria and just ignore some narratives or waves on a crypto. So we are now going to our first question. So let's start from Jake, and then we goes in this way how we go. What's the narratives of this bull run, and how do you think it's okay? Two questions in one. Is bull run starting, and how do you think when it will finish? And next, what is the most promised narratives and projects now that the ventures hunting?
Yeah, so I think it's a pretty loaded question. So I'll kind of tackle one by one. So obviously, with the hype of the election coming and two pretty different style candidates and where the polls are kind of leading now, I think there's obviously a hype that's engaging a bull run conversation. I think that market makers behind the scenes have certainly played a role in maybe driving up some of the prices and some of the volume that we've seen in the last potentially 2 weeks. And so I think that there's a feeling of a bull run coming, which is great. But I think a lot of that is kind of due to the US election kind of coming and one particular candidate that's a bit more bullish on crypto. In regard to the second part of your question, I think it's quite interesting, you know. So there's always terms, especially as a VC, you kind of hear it, right? It was gaming, then it was AI, now it's DePIN. And so there's always these buzzwords that you kind of hear around projects. And, you know, once one or two projects get funded, everybody kind of tackles into there because they believe that if they use these words, you know, they're going to also get funded. And so we've kind of been pretty steadfast in our approach. We look to invest into financial products, so neobanks, institutional based products, products that offer real financial tech that are used in traditional finance that potentially a lot of crypto users aren't aware of. I mean, even tools such as staking, right? Like decentralized aggregated staking tools. And so we've kind of stuck by that narrative of underlying technology, and it's a lot of our key metrics in terms of what we invest in. We also believe things like the GameFi space, right? As they mature, new products will come in. And so I don't particularly know if I agree with the sentiment that things have passed and maybe not done well. I think that a lot of people kind of use these buzzwords to try to raise capital, but there's nothing really there. So, uh, you know, again, that's a bit of a loaded question, but for us, we see that the market has kind of turned in a way where a lot of the serious founders are still here, and a lot of the projects that were kind of night and day have left just because market conditions have been a bit tough. So I hope that kind of answers that question.
Okay, so let's move to Nadim. What your vision of my question?
So the first part of the question, I mean, as Jake said, it's kind of a heavy question and has no kind of clear put answer to it. Like, but looking at it from a growth perspective and an incubator, um, the thing about this is that it changes every week. Every week there's a new narrative coming out. I mean, before it was meme coins, AI, DePIN, DeFi, and nobody really knows, to be fair. I mean, it's almost like predicting the future, like having a crystal ball in front of you. All you can do that is have educated guesses, you know. Um, but I'm super bullish on AI and DeFi personally. I mean, I've invested in some pretty small startups myself, so I'm hoping for the best. I mean, and the second part of your question,
Mhm.
is it a bull market? to be fair, I think we're on 0.5 out of 1. Like we're waiting for the elections as a catalyst, and to be honest, I'm not sure if this is going to bring us into what 2021 was, like the crazy, put $10 in the market, it becomes 1,000 overnight kind of thing. I don't think this happened. I mean, there's too many new institutional players on the market. There's we're becoming a real. I mean, we were a real industry, but we're becoming more. What's the word?
Okay.
You
Okay.
can continue if you want.
Yeah, sure, but we have a big discussion panel. We have a lot of interesting questions. So for now, we can just 1-2 minutes short answers, combine different point of views. Yeah, so let's go into next speaker. Alphaberry Capital, it's your choice.
Okay, well, I guess first of all, I think the real world assets tokenization is gaining momentum. And actually, we see it as quite an interesting space where we can utilize part of our technologies. And yes, we are working towards this direction. Also, we believe in market neutral strategies, all these strategies to generate yield that actually will beat definitely the current staking yields and will provide the healthy alternative to, let's say, neobanks, to yield as a services providers and other similar decisions from financial field. And yeah, we invest towards these two paths currently, mostly. Regarding the perception of actually how do we perceive the market, I think we are still waiting for the altcoin season to start. And I think this is the main narrative now. And actually, the question is whether it starts now or after the US election. And yeah, of course, there are certain speculation regarding the outcomes of this election and whether it will affect the altcoin season. Actually, I'm leaning towards the Standard Chartered alternative investment department point of view. I like these guys.
Mm-hmm.
They indicated that they don't care who will win,
Mm-hmm.
because either BTC will be around 80K or 125K. That's it.
Okay, I think
So I think we're just at the beginning. Maybe just another month to wait, just to let the dust settle, and then I think we are quite close this moment.
Okay, perfect. So we are going to Nikita. Thanks, Evgeny, for your answer. And we are going to Nikita. Nikita, what the
Yeah,
projects you are hunting now? From what narratives?
so usually I'm trying to also go with the narrative, because if you personally like some projects and they're not in the meta, it will be pretty hard to push them for the retail investors, for example. So you can invest in round, but when it goes to the public round and the project is not like in the meta and it's not really hyped or popular, it's gonna be really hard for the project to push it, and it will be hard for you to get your money back and to make some profits on it. So usually, yeah, I'm also trying to go with the meta. So it's RWA. I also believe in the tokenized assets, and I believe in the AI projects, but that are building some real products themselves, not like using ChatGPT or something. OpenAI API keys, something like this, because we have apparently seen a lot of projects like this in the previous years. About the question about the bull market, I actually think I actually agree with my colleagues here that we are also waiting for the elections, and I believe that Trump will win the elections, and I believe that Bitcoin will go much higher. But still, there is a December effect always, like before the New Year, before like the Christmas. People still are like collecting some money and trying to buy something, trying to go for the holiday, etc. So I believe it will stop for a little bit, but in January or in February it will again go much higher. And I think this year is very, very similar to the last year. But I hope this one won't be like a fake bull run that we had in this February, March, and May. So yeah, that's what I think.
Okay, Perfect. So we're going to next question. How do you balance risk and profits when you choosing some projects, yeah, for early stage Web3 startups? Jake, if you want, I
Yeah,
can.
so we typically look at products that don't rely on the sale of their token in order to be successful. A lot of what we look at is the underlying technology and the the profit or the revenue that the product and technology itself drive. So one of the big mistakes that a lot of the venture funds made early on was betting on projects that had communities that would drive token sales, and by doing that, you had retail exit investors. And so one of the things that we look at is, does this technology make money, and are they able to survive outside of the sale of their token, which is something that I think a lot more funds have become sort of privy on. And so that's really how we've been able to identify successful projects. I mean, things like neobanks, right? Or products that have AI trading solutions, right? Where they don't necessarily rely on the sale of their token in order to drive their revenue. Or so for us, that's something that's worked well. But would love to hear what my colleagues have to say about this as well, because I always find this pretty interesting.
Hmm. Okay, Nadim.
So actually, to be fair, it's exactly the same as Jake, honestly. We, I mean, we really stopped relying on the tokens themselves, uh, and more relying on the product themselves, if it can generate revenue over an X period of time, and then the token comes into play, not the other way around. I mean, this is how you're able to find projects that have a long-term vision. I mean, you just have a quick conversation with the founders, and if they put like 90% of their focus on the token, then you realize, okay, these guys are short mindset, and there's a chance that they might not do well. I mean, so in my perspective, it's exactly the same. Um, and also one more thing, I mean, don't don't go try to search net don't go trying to search for the next unicorn, the next Facebook, for example. I mean, you just have to be realistic in searching for projects, and that's it. Just look at it with a pinch of salt. So yeah.
Okay, I will mark one more question just from these words. But I can add this question. You can add answer for previous question. So if you want, you can give me answer on both questions for next speakers with us. You tell that don't look for a next unicorn. And sometimes we miss the projects that just blooms, like boom, in the project we didn't expect. And I think every venture capital company overseas have these cases. So maybe you can tell us one, two cases when you missed some deal, thinking that it will be not interesting, and this is when just grows in X's when it starts. If
Yeah,
you,
would you like me to kick this one off? Look, I think as a venture fund, nobody's perfect, right? I think there's times where you see investments and you think, this might not be for us. And a lot of times too, it's about finding the right venture fund. So I don't know if I want to name any specific projects that we've missed out on, because I think there's projects that we've invested in, and because we invested in it rather than another fund, they maybe did better. So I think a lot of it too is the funds who back you and believe in your vision. So I don't necessarily say we missed. I mean, look, there's things that we missed on the traditional side. We missed out on, Kraken, and we missed out on Spotify and different things. So from the traditional side, sure. I mean, even on the gaming side, we missed out on a number of projects. But again, I think a lot of the success that they might have had was from the funds who backed them, right? When you have funds like A16Z or Outlier, or even funds like us in the chat, right? I think a lot of who backs you and who believes in your vision is what's driving success, right? Even investors like Nikita who connect projects to the right funds, I think they play a super crucial role in project success, right? Identifying the right funds for the right projects, I think makes 50%, if not more, of the difference. But I think as a venture fund, you're never 100%. Everybody in this chat can attest to that, right? And you always miss at least one or two. So
okay, I understand.
If you want, by the way, I want to add to that.
Sure.
Because what Jack said about, like, for example, like the Outlier Ventures, or what am I doing? I am doing as an advisor as well. So I can tell you from both perspectives, from the advisor perspective and from the VC perspective. So I work with a lot of VCs, like more than 150, 200 VCs, and we are constantly talking to them. We are discussing what we are investing, which projects, which areas, etc. So back last year, for example, a lot of the VCs were applying strategy that's called spray and pray. So they were doing their due diligence, but they were just following the meta, and they were not really working with projects a lot. So they were just investing in them, and like, I forget about the money. Let's see what will happen, because like it's bull market, right? Everything should blow up. I mean, but for example, what Outlier Ventures guys are doing that I closely work with is that they have their own accelerator, right? So they invest only into the projects accelerating. So this is their value add, and I believe that the VCs have actually value add that are providing this project with, mostly importantly, with experience of making good decisions, like good executive decisions, and providing them like with their connections and with some other support. I don't know, maybe even marketing support. That's when it makes the projects better and gives you better result as a VC for your investment. So I personally believe in the value add, and I believe in the VCs that have this value add, not just investing, giving them money, and you'll forget about it. Because we also do have some tier 1 VCs that can give you money as a project, and that's all. You will have their name on the cap table. Yes, that's good. That can give you a lot of credibility and like good positive inputs on your like pitch deck or something. But still, they won't help you in any scenarios, because they are applying spray and pray actually. So everyone is different, but as I said to this question, I believe that adding value to the project helps you to get more profits and helps you to get your investments to the bigger amount of access.
Yeah, we're just talking about smart money. Yeah, and this has a lot of bigger value than just the money for a project. Okay, and quite answer from Evgeny.
Yeah, actually, it was quite interesting to listen to these points, and yeah, I believe the due diligence framework plays crucial role. That's it. However, I'm the data guy, I'm the data man, and I believe in old school diversification and math model. That's it. So since I came from the asset management corner, anyway, we create certain modeling, we create certain variations of portfolio, some kind of max drawdown, other metrics. We even tried at one point, we even tried to build the math model of perceiving the portfolio as an option with a certain strike of European style option, you know. And actually, I believe this way is productive, and this is the real risk management.
Okay, so we are going to our next question. It comes with me from my experience from 2021. As we know, in a classical venture, it's one of the necessary things for a project who want to fundraise some money from VCs. They need to build a MVP or product. But from my experience in 2021, projects who have some MVP or working products but not listed yet can't raise more money than projects that just going in pitch deck, because in pitch deck with some videos, with some cool animations, it looks like something amazing will come, and it needs to be cost and valued now in this round like $100 million. And we know a lot of cases when these projects without anything, without revenue, without product, raise a lot of money. So how this changed this year? Because it's with also all our conference making about mass adoption, and most of users I checked from the market, they seen projects without product now, but maybe listed, yeah, but without product, and think that it will be not okay. That's why I'm asking how it changed from 2021, for example, the same narrative in VCs, or it more bigger criteria?
Nadim, I know you didn't get a chance to answer the last question. Do you want to kick this one off, or do you want me to start?
Go ahead. You're already unmuted.
Oh, okay, perfect. So, we always say kind of in the VC world, and I'm sure a lot of you guys may agree, in the beginning, everyone was buying the dream. And now that the market has matured, and like Nadim said earlier, we're kind of moving toward this institutional flow. I don't necessarily agree that not having a technology ready and not being at a breaking point to where, you as a VC can test and try these products. I mean, look, obviously, if you're in stage 2 and you're relatively close and you need that funding to get you over the hump, but you have a relative product. But I think a lot of people who are pitching a dream and just putting together a pitch deck and 4 years out on the roadmap are not necessarily catching fire. And a lot of what we've talked about within the VC circles that we kind of roam in, and again, that's a very institutional side, but we talk a lot about, from our perspective, seeing products that are creating value in maybe traditional markets, not even Web3. So creating Web3 products that can be used by users who are not necessarily crypto users, right? So finding adoption in ways that people don't even really know they're adopting Web3 products. So for example, you use Apple Music or you use Spotify. No one asks when they're downloading Spotify or Apple Music what the underlying technology of that product is, but there's a company that supplies that, right? And so I think as we move on as a space, I think what you're going to see is a lot of the products that are building for traditional product systems are going to be the ones that see a lot of success. And that's something that we've talked about now for a while is, well, how do you create adoption in spaces that aren't necessarily looking to adopt Web3 necessarily? So that's really where we've been, but would love to hear everybody else's response to this as well.
Okay. Nadim, want to add something?
Yeah. I'll just talk about it a bit more. So basically, it depends because from our perspective, we are an incubator and investors at the same time. So we invest in the project we incubate. So we take them from scratch and then we invest in the projects. I mean, as a VC coming directly and investing in the project after or in the middle of the incubation process, I'm a firm believer in having an MVP ready, or at least a test net ready. Anything, right? Because well, I come from the view that it's just a risk thing. It's just too risky these days. Investing in a project that has nothing. I mean, that promises, and at the end of the day, the guy can just walk away, and you end up with nothing. So yeah, this is just what I wanted to add.
Okay. I will mark one more interesting question about developing and after raising money. Going to Evgeny, Alphaberry Capital.
Well, yeah, I totally agree that having MVP and proper blueprint helps. But for me, actually, from my perspective, I always try to assess the proven track record of a particular team. Because even if they have just a blueprint, and but the idea is, let's say, is market fit, and we see some potential. The first thing that comes to the mind is whether they are capable of developing this product. So the first thing, we should delve into their past and to see what kind of products they already developed. If we understand that they have the potential, they have proven track record, then I think this project will have more positive votes during the investment committee.
Okay, perfect. Nikita, finished this question?
Yeah, sure. So I actually have a pretty simple answer to the question that you asked for, like 2021 versus now. What is different? I really believe that crypto, like Web3 startup industry is becoming, it's more look like Web2 startups actually right now. So in 2021, as I believe Jake said, that if you have like a pitch deck, right, you can go to the investors. If you just have a good idea, you can go to the investors and just get some money from them. But that was back in 2021. Right now, it's more of a, hey, listen, guys, we like your idea, but can you please show us what is the product actually? Do you have a demo version, or do you have a live product? Are you generating revenue? And of course, the team is very important right now to me as an investor and to the VCs that I work with. But still, right now it's more about showing the real traction of your company, and that's more of a Web2, like Web2 strategies that Web2 startups right now are implementing to get the money raised. So I honestly believe that really soon that it will really look like Web2 startup industry, like but only in Web3. You just have a company on blockchain, but you still are doing the same things as you would do as a business owner. Web2.
But
And that's
sorry to interrupt. Don't you think with such approach we cut off the early stage investing? I mean, the real early stage investing, when people just have an idea, just a blueprint, and that's it.
I believe that still will be a lot of projects that will be building something that they have a good vision on, they have a good idea, and there are always a lot of VCs that can back you. You just need to find the right one that will actually help you from the beginning. So I believe Web2 has the same, right? Traditional finance companies still have the same. If you have a good idea, if you had maybe some good connections to the VCs or family offices that can back your idea on the early stage, even if your like family can give you like 50K initial money to develop something or do some marketing for your Web2 startup, then you can make then you can fundraise more money from the bigger VCs when you will have more traction. But I still believe that we can have a lot of early stage projects still in crypto, and I think we'll do
So
it.
I just want to add one thing here. I know we have a lot of questions. I just want to add something for 30 seconds. Evgeny, honestly, I think that the space is moving away from such early stage. I think too many companies and venture funds have been burned on, guys like yourself, and we're very data driven as well, where we look at the metrics and we say, yeah, this is a really buzzing technology. We love the underlying, but when you invest too early stage, a lot of times you get burned. And so I think companies now are willing to miss out on opportunities. And look, even for us, sometimes we really love an idea, but sometimes it's just too early for us. And so I think the space has moved a little bit more just because of what we've seen in the past. And look how many spaces and venture funds were around here in 21, and look how many are still left standing, right? So I think a lot of people got burned on that early phase pretty hard, and so I think we've seen less and less. I mean, that's just my perspective, but I'm sure different funds have different philosophies and different core foundational values. So it's really fun.
Totally agree with you. And as the Web3 space is rapidly maturing, I also observed that a lot of funds, a lot of family offices, they want to see some commitment from the founders. They want to see at least certain capital. If you cannot provide even something, that's also the proven track record in some sense.
Okay. And now we have one specific question. After all our conversation, we have few points of view that contradicts each other. Yeah, from one of the first question, it was what narratives looking now at VCs, yeah? And some of you answered that we just looking at market and what a narrative we are diving in. When we looking from the VC side, give us please MVP or some traction. And we had a bear market. Yeah, in bear market, as we know, VC is not so active to invest anywhere. So then was words about developing. But if now is a hot time for ventures, yeah, for some deal flow, and projects need to develop something great, and as we know, it's a opinion of the most players in the market that November 25 is potentially the end of this bull run. So how project can grow normally if he had only from now 1 year to raise this money to build something, become profitable, and then go in bear market? Or it's need to become a profitable business with stable revenue as in classic business? I think my question was enough understandable.
So just so I understood the question correctly is,
Yeah.
how does a product sort of grow in this market where we've been a little bit more bearish and potentially needs to develop? I apologize if I didn't quite get that question. Maybe someone else would like to hop in here.
Yeah, I mean that when I asking what narratives looking now, no, ventures looking now, yeah, and some of the answers was like we looking really now in market. If AI now in a hype, we looking in AI. Yeah, if RVA in a hype, we looking in RVA. Next words was that you need to have an MVP, for example, and need time to develop. Yeah. So if from this market and it's a hype now, and we prognosing that only 1 year plus minus lasts before BullRun ends, is it enough time to build a project, to build a great project, become profitable? That's the question.
Absolutely. I think you can build a project in months, right? I think a lot of what we've seen and when we talk to developers is you can create amazing products in not a lot of time. It's just a matter of the use case of it, right? The utility of the project itself, where, for a while, I mean, look, how many L1s, L2s, and different layered solutions can come out, right? You can only have so many blockchains that have utilization. And so, for us, what we really look for, and I'll talk a little bit about like our core philosophy, and I won't spend too much time because I want to hear everybody else, but what we really look for is how does your product get used in the market? And so, there's a neobank structure that already exists, but if you have the ability where you're in a country with, unstable economies, right, like Western Africa, and you can build out a great financial product in 3 months, and there's a demand for users, yeah, I think there's an amazing opportunity. And I'm sure Evgeny will talk a little bit about the data on this, but I don't necessarily think you need 5 years to build a technology. I think you can find, especially with all the available tools and all the open source and all the things that are available now, I think as a quality developer, you can build a product that people need in a relatively short time. And as your product becomes profitable and as you start to bring in community, you use the funds that you get from these projects to make your project better. And so I don't necessarily agree with the fact that you need to be building for 3 years. Now, look, gaming projects, sure, you might need more development time and things where it's a little bit
Yeah,
more
that's why
labor intensive.
I'm mostly uses the case that was from game in 2021. Yeah, because some
Yeah.
games need to 1, 2, 3 years to build something great, and they
Yeah.
still didn't build anything normal.
Yeah, and look, I mean, look at the
I-
gaming sector.
sorry.
The guys who rule the space they have major budgets, right? Like, look at Grand Theft Auto. Grand Theft Auto has taken 10 plus years to build the next Grand Theft Auto because they're so labor intensive. But when you look at sectors like DeFi or you look at sectors like Deepin, right? I think you're seeing a lot of amazing products come out just because of the technology that's available. And so, like, for us, we as a fund, we don't care if you started building your project a month ago. If you have real traction and you have a use case and you have the ability to onboard users and generate real funds, for us, that's immediately attractive. But we'd love to hear other people speak on this as well. I don't want to take all the time.
Okay,
I
great.
just wanted to add that I think this is just a question about the right timing.
Yeah.
You just need to, the project must define the investment horizon within it plans to operate, first of all, and to build its roadmap and financial roadmap accordingly. If they can sync it perfectly fine, or at least good, it will work. That's the first point. The second point is that, okay, if it's about the composition of the big projects, you don't need to build the whole project at once. Okay, try to make a decomposition. Just create something that you can already utilize or present as a good MVP, as a working piece of some greater picture. And believe me, it works. I know a lot of examples when exactly after this stage, the capital flows in this project.
So you mean it's okay to build an ecosystem, but starts with one of the project inside this ecosystem to be focused and to realize it, and then it goes better with fundraising.
I think the project should define the focus, the main product. If it can deliver the big product, just just make decomposition, just create some part of this product to present. At least this is traction, this is MVP, and this is something that you can present to prospective investors. That's my point. Again, this is and it's easier operate within shorter investment horizons and to plan financing.
Okay, I understand. Nikita, add something to us.
Absolutely. So I actually think that you don't need you don't need to build the whole product at once, as my colleague said. The road for 1,000 miles starts with the first step. So you need to build something, and I agree with that. And we see all of these projects, all of these big projects that are building something. I don't know, some chains, some big utilities, some big DeFi projects that are building apparently some big projects for like 2-3 years, and they're not generating any revenue yet. So if you have some idea, try to build an MVP that will help someone, that you can onboard users into your solution. You can onboard maybe customers, and you can start generating revenue. Or even if you can start generating revenue already, start with something, build an MVP. So I agree that you don't need to have a fully functional product like in, I don't know, in 2 months. Just start from something. So I do believe that you can build it not for like 2-3 years, as you said. So Nadim, please share some thoughts about your experience.
Yeah, just actually, I wanted to reiterate what Jake said earlier. I mean, of course, if you have a crazy product with super complicated tech, of course, it's going to take a while, right? It's not going to take 3 years, but it'll take you like a year, 2 years to build your product. But as a startup, that's in maybe 2 months, you build a fully functional testnet, or even a slightly functional mainnet, propose it to bigger investors to get bigger ticket sizes, bigger, better marketing, and then you can continue and increase the product, make it more complicated, add more bolts into it. So I mean, as an incubator, this is what we look for: something at least simple. And sometimes they don't have it; they don't have anything, right? So we help them get to the point where, okay, let's say we have a couple of developers on the team. They want to build something. They give them the tools necessary to build. And this is our strong suit, to be fair.
Okay. In my list there was a question, advice please founders how to build a project, but I think you answer on all of these most important things just for the last 10 minutes. Yeah, and maybe last question, it's 45 minutes flies away, yeah, but we have an interesting conversation, so we can take 10 minutes more. So my last question about how the simple user, for example, can find or join some early stage projects, maybe on the same level as some VCs. For example, I know some licensed launchpad starts, for example, in Switzerland, that can provide crowdfunding with full regulation on the same price levels and as the seed and pre-seed rounds, and how it compares with your VC deal flow. Now bigger projects coming, or most of projects trying to raise money from a community. I think my question will be understandable.
I'll give my 2 cents here. And what we've seen in the last year is that VCs, what used to be perceived as a great thing of having them on your cap table, by retail market has not been perceived the same way. They've kind of learned that a lot of VCs, especially on the bigger end, are using them as exit liquidity. And so I think you're seeing a lot more community-driven projects where, founders are more appealing to the retail investor directly to fund these projects and giving them the upside, I think we're seeing a lot of that within the RWAs as well. I think a lot of the RWAs, I mean, obviously the accredited investor thing makes it a little bit more complicated, and some of the liquidity provision stuff makes it a little bit complicated. But I think of what we've seen a lot within the RWA space is really interesting, because you're seeing this kind of direct retail model where opportunity to buy things such as real estate or livestock, or just different options. But I think we've seen a lot more in the last year of the ability for retail to kind of have the same deal flow for us. But what that does is it really makes us complicated for us, right? As a VC, would I want to spend my capital the same way that I can get $20 worth instead of having to put $100,000 check? And so I think it's actually somewhat complicated in investing for a lot of projects, right? Where projects that have even tried to go VC route, didn't raise the capital, then go community, or went community route, didn't raise what they needed, now they're on VC, and now they're having to take a discount. So that's actually made things a bit more complicated. Would love to hear what everyone else has to say, but from the VC perspective, I definitely see a transition from projects offering direct to the retail community, especially when they're able to build hype through like later promised airdrops and different solution sets for building community.
Okay. Going to Nadim.
Just quick word. I mean, it really depends on the project. Depends what they're trying to build, because you can build a massive community focused driven project, but when it comes to, let's for example, infrastructure or RWA, for example, I mean, at a certain point it becomes difficult to go that route. So this is my 2 cents on what Jake had to say, because he answered the question pretty in length. So
Okay, thank you. Going to Evgeny and finished with Nikita.
Well, I totally share opinion of my colleagues, so I don't think I have anything interesting to add here. And yeah, so please, Nikita, take a lead.
Okay.
Yeah, sure.
Let's finish it.
Yeah, I have some thoughts about it actually. So, if I'm not mistaken, Roman, you told about retail investors, like regular people that want to invest with the same VCs in the early stage of the projects, right? That's what you mean. I believe that there are a lot of community VCs these days, but these days, of course, they are not really active, because communities and like retail investors doesn't really have a lot of liquidity to invest in the project, because they lost most of it in the projects they have invested last year and maybe 2 years ago. But in my honest opinion, I really do believe in the power of community VCs in the next cycle, just because I saw it with my own eyes, that community VCs investing like 200K from 200K till $1 million into like projects, and they do it like a couple of times a week, so they can invest like in 10 projects a month and give them like 500K ticket just from the retail investors that are investing from this community VC. So I believe they will have much more power next year, but I don't really think that some projects should have community VCs on board, just because it's a little bit more complicated reason. So retail investors doesn't actually understand projects like VC itself understand it. Like LP VCs that have a big due diligence team, that have a track record, that have an experience working with these projects. So regular VCs as I don't know, like LP VCs, they understand that, okay, listen, I can wait for, 6 months, or maybe I can wait for 12 months, and I really will have some profits out of it, rather from the revenue, from revenue sharing, or from the profits of the round. When retail investors can actually start to ask you a lot of questions: when will you launch, when this, how is it going, spam the chat.
Yeah, I fully understand you.
Just like the founders, etc. When regular VCs won't do that, they can ask in the private chat, right? I ask you one question, and that's all.
And asking you once a month, not few times a day.
Yeah, exactly. So I think retail investors will have opportunities to invest in the projects, but they won't have an opportunity to invest in all of them. For example, projects that have Binance Labs or Animoca brands, they don't allow projects to have community VCs on board on their cap table. So that's a pretty interesting topic, but that's my little.
I just want to add one thing here, and I promise it won't be more than 30
Sure,
seconds because
sure.
I know that we're over. But I think that working with VCs and working with funds, it's not just about the funds that they provide, but rather the experience and the knowledge and the know-how to navigate complex markets. And so, yeah, it's great getting funds from community-driven projects, and we've seen that in the community is great. But I think a lot of, besides what you're getting, besides the capital, is the ability and the know-how to create a successful project. And I think a lot of that is lost. And we see it with community-driven projects. But I just wanted to add that in, and I think Nikita made some really good points there.
Okay. So we are 51 minutes in a stream, and I think we need to finish this day. Yeah, thank you a lot for onboarding us, share your experience. It's really great experience from all of you. So we just need to finish. Wish a lot of luck to our attendees, and I think we all wish you find new unicorns in that way you never expected.
Thank you, guys.
Thank
Thank
you.
you.
Really
Thank
appreciate
you.
it.
Bye-bye.
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 Bye.
Bye.